Everyone always wants to know, are we near the Bitcoin cycle top? Has Bitcoin topped? Instead of giving you hopium or telling you that Bitcoin's going to go to 1 million, I'm going to show you the exact risk management framework that I use to identify when Bitcoin cycles are close to ending. I've been in Bitcoin for 5+ years now, and I've been programming Bitcoin analysis for quite some time. And today we're going to be breaking down 4 specific on-chain metrics that have historically identified every major market cycle top since 2011. I want to make this clear though, this isn't about predicting the future. It is about managing risk based on what the on-chain data is showing us, right? And by the end of the video, you'll understand how to use these on-chain metrics instead of just reacting emotionally to the price movements or whatever some guy on Twitter is screaming at you to do. All of these on-chain metrics, by the way, are available for 100% free on chartinspect.com for you to view yourself. Risk management isn't about being exactly right or wrong. It's about positioning appropriately for different scenarios. And in my opinion, on-chain analysis is particularly effective at showing the psychology of what traders are doing on-chain and how they're positioning themselves and what we as analysts can derive from that wealth of information that's on-chain. So let's get straight into the analysis. So first of all, long-term holder net position changes. This is showing whether long-term holders are accumulating or distributing. Specifically, this is tracking changes in the supply held by long-term holder wallets. And you can see on the chart that during bear markets, you see massive green bars. And this is basically Bitcoin flowing into long-term holder wallets or coins transitioning into long-term holder status. So during early to late stage bull markets, you'll see these large, massive red bars from large whales and long-term holders offloading their Bitcoin. This phenomenon of this supply transfer between long-term holders and short-term holders, subsequently the supply becomes short-term holder supply, right? So in bull markets, because as long-term holders bring that supply to the market, there needs to be enough demand to offset the outflow, or else the price will go down. This is simple supply and demand. Right now, the price has been continuing to go up, meaning that short-term holders have been satiating that supply, but historical precedent shows that there's only so much that can be absorbed by the market. But over the past month, we've actually been seeing an average net outflow of around 3,000 Bitcoins per day being spent, moved, traded out of these long-term holder wallets. And we can see that major long-term holder distribution typically has corresponded to these major local tops or major lows in the price when conversely the long-term holders have been accumulating, right? So this is just one metric, but the second one I want to talk about is the long-term holder realized profit to loss ratio. So this measures the ratio between total realized profits and total losses for long-term holders specifically. You can also look at it for short-term holders and as well as the overall market. But right now I want to just focus it on long-term holders. So this basically shows you whether these long-term holders, conviction holders, are realizing either profits or realizing losses. And above 1 means they're realizing more losses, or below 1 means they're realizing more losses, and above 1 means they're realizing profits. So for a long-term holder to realize a loss in these big downturns and bear markets, it means that they've sold the Bitcoin at a price lower than their original cost basis. Typically, this only happens during these severe pullbacks in bear markets or in bull markets, or uncertainty and major capitulation events in bear markets, such as beginning or late stage bear markets. And so far this cycle, we haven't really seen a major break below the realized profit levels for long-term holders. We have seen a little bit of a break below 1, but then subsequently thereafter, we've sort of bounced back from that level. And as a side note, you can also view it on a 2 different ways of looking at it, on a USD denomination or the Bitcoin denomination. So you can really see the magnitude of the ratio from 2 different angles. And what makes this indicator really powerful is just basically the clear regime shifts that you can see during profitability or during loss events. When this breaks below or above 1 meaningfully, it can signal major changes in market sentiment. During bull markets, this can stay elevated for pretty long periods of time. As you can see in 2017, it was really elevated for quite some time during the beginning of 2017 as well as all the way to the end in Q4 of 2017. And you can also see that it really falls quickly before or after local tops, pullbacks, or major cycle corrections. And you can see just how quickly the profitability can turn around, as well as how fast it can just go up, right? So that's because long-term holders can realize profits that are 10x, 100x, or even 1,000x greater than any losses they're taking. So remember, this is a ratio between realized profits versus realized losses. And so it can be quite logarithmic and quick to go up, as well as quick to return to normalcy or to negativity as price goes down or sideways for quite some time. So let's zoom in here and show you what currently is happening. So currently we're reading a slow increase back to increased realized profits, which means long-term holders are at a point where some are offloading and realizing profits, but not all long-term holders. And some could just be waiting for higher prices. But so far this cycle, we've actually seen an enormous amount of realized profits across the board just for long-term holders. And so I really like this chart because it's simple to illustrate that idea, in my opinion. And as always, you can see the exact calculations that I use for the charts. So another thing I want to touch on is, unlike SOPR, which is the spend output profit ratio, which weights transactions equally, this ratio, on the other hand, is sensitive to the transaction size. So the absolute values that these holders are trading their Bitcoins for. So when whales take profits or cut losses, it really shows up clearly in this metric because it's not equally weighted. It is sensitive to transaction size. So yeah, the next metric I want to talk about specifically is the cohort profit and loss on a total percentage supply basis. So this chart basically shows how Bitcoin supply is distributed across these different holder groups, long-term holders and short-term holders. And it also signifies their profitability. So think of it as a snapshot of who's winning in the market and who's losing in the market at any given moment, right? And so quick definitions here. Let me just turn off my tooltip. You can see that in the blue areas, this shows long-term holders, specifically long-term holders in loss in the dark blue, and long-term holders in profit in the light blue. And on the other hand, short-term holders in profit in this light red area, and then short-term holders in losses in this dark red area. So the size of each area shows you how much Bitcoin is in each group out of the total supply, and which of that supply, what's in profit and what's in loss, right? So during bull markets, you'll see specifically the red area on the top start to expand, and that's short-term holders in profit, meaning new money is making gains in bull markets, right? So you can see this happened in 2021, in 2017, 2013, right? It's also happening right now. So we've seen sort of a shift to profitability, a shift to loss, a shift to profitability, a shift to loss, and now a shift back to profitability. So so during bear markets, you'll see more blue accumulation as short-term holders either are capitulating or they're aging into long-term holder status, right? So currently we've seen a sort of some distribution from long-term holder wallets that are in profit. A majority of the supply, about 70, I think it was 77%. Yeah. So 77% of long-term holders are in profit, and only 14% are short-term holders that are in profit, right? So this distribution pattern is pretty similar to what we saw specifically, in my opinion, in 2013, where we had these two peaks. Sort of kind of looks a bit similar in that sense, but it hasn't really reached the magnitude of other bull markets yet, such as 2017 and 2020. And that's not to say that it has to get there either, but the patterns are playing out as they always have. So long-term holders are distributing, short-term holders, profitability goes down when we have pullbacks, they capitulate, and that corresponds to long-term holders accumulating thereafter and then distributing thereafter, accumulating, distributing, right? So what makes this powerful is you can see those transitions. When short-term holders supply shrinks and long-term holders supply grows, it usually means Bitcoin's being accumulated by stronger hands, and the opposite is true for major market corrections, right? So the next chart I want to discuss is the long-term holder profit to volatility momentum ratio. So this chart basically compares the current long-term holders' unrealized profit against their 1-year moving average. So the actual ratio itself, the unrealized profit ratio, is asking a simple question basically: how extreme are long-term holder profits relative to Bitcoin's inherent volatility? And then we can apply a moving average to the ratio, which can show when we break down from these levels or break out of these levels when extreme events occur, like when we reach these high ratio levels. In other words, it's basically showing when long-term holders, or whether long-term holders, are experiencing accelerating profits or losses based on what we've usually seen historically speaking. So to jump straight into the chart, we're seeing positive momentum we're seeing a shift back to positive momentum, right? So the long-term holders are experiencing profit conditions that are above the 1-year moving average, which suggests that we're in an environment where long-term holders are still sitting on major profits, as you can see by the large increase in this ratio. That and this is sustained momentum. Periods like this often follow distribution phases, while the negative momentum shifts often shows either the start of a bear market or either good accumulation periods like we've seen in 2024 and in 2025. So the fact that this indicator is also positive on basically all these momentum timeframes. So 1 year, we can look at it from a 1-year perspective, that we only basically saw a very small dip beneath this level. We can see it on the 180. It's also positive. We can see it on a 15-day period, which is much more volatile, but it's still shifted towards positivity. On the 30-day, it's positive. On 60, it's just about positive. And let's see, just on the 2-year, which is a very long-term time frame horizon, it is positive, obviously. So you can look at it through different time frames, basically. But the fact that this is positive on all time frames suggests that long-term holders are well positioned, and potentially preparing for more profit taking in the future. If history is any indication, this can typically occur around Q4 of 2020 of the post-halving year, which usually corresponds to November, December timeframe, which has historically happened. So from a risk perspective, from a risk management perspective, this positive momentum adds to the evidence that we are in this sort of later cycle environment where most patient holders are experiencing significant unrealized gains, right? So what's the current risk assessment off of all these 4 charts that we've gone through, right? So we're seeing overall positive sentiment, but typically this regime that we're in historically doesn't last much longer from this point onward, and there's a good chart to pretty much explain that. So if we take a look at the crypto, the year-to-date ROI from all the years in crypto's cycle history. So if we look at just the post-halving year, which is the year we're in right now, we're currently at day 261, and historically it's ended at around day it's topped at around day either 300 to 365 to 331. So we're currently at 261. So that can either mean we're 50 days away from the top, 60, or around 80 days away. So, but the point is not to identify when it's going to happen or how it's going to happen or how high it's going to go. This video is more about identifying these regime shifts. So when the momentum starts to shift, when this ratio starts to decrease, when the cohort's supply and profit starts to go up, when long-term holders start accumulating again, right? So I don't think this time is different necessarily in terms of lengthening cycles. So a lot of people have been calling for lengthening cycles, but I don't think that we'll get that, to be honest. I don't think this time is different. It's not like I don't think Bitcoin will reach higher prices in the future. I just don't think we're going to get to $1 million this year. And from just basically what we've seen, this cycle's still intact and momentum shifts to the upside right now. But it should be clear by now that that doesn't mean Bitcoin's going to crash tomorrow. It means risk is elevated and position sizing should reflect that, in my opinion. And when these multiple risk indicators align, it's a sign of things getting a little bit overheated. So higher risk readings means decreasing positions, having more cash or other assets like gold, and tighter stops, basically. So lower risk readings means higher allocation and having a longer term time horizon during these bear markets, right? So if you bought while long-term holders were accumulating in 2022, in 2019, in 2014, then you're pretty well positioned for when we actually see these major blow off tops in prior history, right? And it's not about being right about every move. It's about positioning yourself accordingly for a wide range of possible outcomes. And when risk is high, you prepare for volatility. So all of these metrics are available on Chart Inspect, and the link is in the description if you want to track these indicators yourself. So as always, this is educational content, not financial advice. You should always do your own research. And the best risk management system is the one you actually follow. The systematic approach that you follow beats the emotional decisions you have every single time when you look at the price. When it goes down, when it goes up, you should make a plan and stick to it no matter what happens. And finally, if you want to learn more about this analysis or any videos that I post, please be sure to hit subscribe and let me know in the comments what specific topics you'd like me to cover next. Thanks for watching. Bye.